G'day, g'day. It is Thursday, the 16th of July 2026. Pretty much as expected. Yesterday traded inside Tuesday's very large range, all caused because of the CPI figures that came out of the US overnight. And we've closed basically as a doji, so it does leave targets at yesterday's high and yesterday's low. The main sort of thing I need to be watching today, looking at the overnight news, the weaker US inflation data still is offsetting concerns at the moment with the tensions in the Middle East. US prices, they actually declined, which is less inflationary. So it is setting up gold to possibly move higher now that the 4,000 level is holding. There's a 49% chance that there'll be a September rate hike because of higher oil prices, with Trump flip-flopping from day to day about whether he is going to impose a tariff on ships sailing through the Straits of Hormuz or not. He's now backpedaled on that. The main focus of yesterday was the Fed chair, Kevin Warsh, and he's reaffirmed that the central bank has, inverted commas, no tolerance for persistently elevated inflation. So if there's any data that comes out of the States saying that prices are looking to rise, they will look to raise rates, and that'll put downward on gold anyway. Looking at yesterday's intraday action, there was nothing in Asia. I had to really be patient. I just sat and I didn't take any trades, which sometimes happens. As I said, I don't trade inside a 650 tick 1 minute candle from the news. There was selling at the high of the day that traded down. There was in the US times, it actually came back and touched the value area low from Tuesday, and that would have been a really nice sell, but that happened at 11 p.m. my time, and I was asleep, and I don't try and trade through New York. Looking at today, I'll just switch on the volume profile now. Okay, what do we got? Okay, switch on the buy line. Interesting. So today, as I've mentioned, it's looking to either trade into the previous day's high or the previous day's low that is now making a double high with Tuesday's high. Liquidity will definitely be sitting up there. Point of has been hit, so I'll steal this line and put this in here. Where are we now? We are below the New York point of control. We are below the dynamic value line. We're above the IP. This is an absolute no trade zone. This is the abattoir that institutions love to put traders in. You're going to get chopped around in this. The upper value fire line sits below the value area high, which will be a nice place to possibly take a reversal off there or look to buy off the value area lows. So we'll be patient again and wait for the trades to come.